Welcome. In this video, we're going to look at what it will take to close our $2 trillion annual deficits only by raising taxes. The last video looked at what it would take only through cutting spending, and the next video will look at a combination of the two. So let's start with what everybody talks about, tax the wealthiest. If we raise taxes on households earning $1 million or more, that means higher top marginal rates, raising or taxing the capital gains more like ordinary income, reducing deductions and loopholes, we can raise as much as $275 billion before the wealthy start changing behavior. And the typical affected household would have to pay $65,000 to $100,000 more annually if we were to do this. Of course, the actual increase would depend on each household's income sources and tax planning. So this brings us to just 13.8% of our $2 trillion goal, which means we have to look at the next tier of income. Let's look at higher taxes on households earning $400,000 to $1 million. Here, the analysis shows that we could get additional revenue of $250 billion a year. The typical household in this range would have to pay $18,000 to $30,000 more annually. And once again, actual increases would vary considerably. This brings us to cumulative revenue of $525 billion, 26.3% of our total $2 trillion goal. So we have to move to the next tier. This is what happens, by the way, when politicians promise that they're only going to tax a certain population, like the wealthy. They find that it's not enough. Either spending increases or the revenue raised is not enough because we can all change behavior. So they move to the next tier and the next tier and the next tier. So be careful when you hear promises from politicians about taxing only one group. But now maybe we move to higher taxes on households earning $200,000 to $400,000 a year. Here, the analysis shows that we could raise up to $300 billion more. That still only gets us to 41.3% of our goal of $2 trillion. It gets us to $825 billion. And the households in this range, $200,000 to $400,000, would end up paying $8,000 to $15,000 more every year. So now we can maybe think about higher corporate income taxes before we go to the middle class or closer to the middle class and payroll taxes. If we look at higher corporate income taxes and we still want to stay competitive with the world, we could raise the federal corporate tax rate perhaps to 28%. We can broaden the tax base here. We can reduce selected business tax preferences, and we can strengthen international tax rules. So we could save $200 billion doing this. And now we're at just 51.3% of our total. So we've only gotten about halfway there. We can look at higher estate and gift taxes by lowering the exemption and having higher estate tax rates. That would get us to $75 billion more in savings, bringing us to $1.1 trillion total, 55% of our goal. So it's, as you can see, getting harder and harder to reach our goal. So now, unfortunately, we do have to look at those who are closer to the middle class, starting with higher payroll taxes. There's a lot of opportunity here, but there's also a lot of unanticipated consequences when we're looking at higher payroll taxes. We could raise as much as $450 billion by eliminating the Social Security wage cap, right? That means wealthier employees don't have to keep paying payroll taxes after a certain point. So if we eliminate that, if we increase the combined payroll tax rate by about 2 percentage points, we could get the $450 billion. This would primarily affect higher earners, but keep in mind that employers would pay half of this. That could affect wages. It could affect employment. Anyway, this gets us to $1.55 trillion towards our goal. We're now at 77.5%. So higher payroll taxes can do a lot of heavy lifting, and that makes sense in a way because it's Social Security and Medicare that are paid through these taxes, and they're the ones that are our biggest program and the most in trouble. But we're not there yet. So now we have to look at higher income taxes on households earning $100,000 to $200,000. There's a lot more of these, so we can raise more. here we're looking at approximately $2,500 to $4,000 more annually for a typical household in this range. By the way, this is nothing compared to what taxes are in the Scandinavian style countries that a lot of people look at. There, the average household would pay $15,000 to $30,000 more than what we're paying now. So this isn't bad if we want to move in that direction. We could raise $250 billion this way through moderate rate increases and fewer deductions for households earning $100,000 to $200,000. Now we're at 90%. If we look at higher income taxes at those earning under $100,000, this would be a broad but relatively modest income tax increase, $500 to $800 per household affected. Now we're at 95%. And if we raise excise taxes and tariffs, that could bring in an additional $100 billion and get us to 100% of our goal. That's increasing existing taxes on gasoline, tobacco, alcohol, aviation, and selected imports. Keep in mind, though, that we pay those. That's a tax that we pay. Should be about $700 per household more on top of all of the other increases. So that's what it would take to get there. We would need broader taxes across the board paid by everybody. What do you think? Is this the way you would want to go? Would you rather cut costs? Well, in the next video, we'll look at doing a combination of both. Again, I'll post these numbers at longtermamerica.com. There's lots of great articles and other videos there. I hope you'll get involved. We have to influence our politicians, as painful as it is, to act now, to balance our budget and be fiscally responsible. Thank you.